Well, Florida's insurance crisis is now hitting us with a 1-2 punch. First, the blow of skyrocketing home and flood insurance, and now the jab of soaring car insurance rates.
You did nothing wrong, no tickets, no accidents, but yeah, you still being penalized. That's kind of how you feel about it.
A part of the surge in auto insurance is due to inflation, including the rising prices of used cars and rising costs at body repair shops. That's a big reason why auto insurance rates have gone up around 17% on average the past year all across the nation.
And when the cost of all those things go up, then there's only really one thing that happens to the cost of auto insurance.
17% is more than enough to squeeze working class families, but again, that's the national average. Research from the Washington Post and FinAmerica shows it shot up 88% in the state of Florida. Once again, Florida leaps off the page. Car insurance rates in Florida, which were already the highest in the nation, are now accelerating faster than anywhere else in the nation. And consumer watchdogs cite two reasons for this beyond inflation. The first is climate change and hurricanes. See, insurance models set prices based on risk, which can factor in the growing effects of climate change. And since Florida's in the heart of Hurricane Alley, the risk of property damage and with it the cost of home and car insurance go up disproportionately in our state of Florida. Plus, Hurricanes Irma and Ian flooded and gutted an awful lot of cars that drove up losses for the carriers and then drove up our premiums. And of course, Idalia and future storms could do the same. But consumer advocates and insurance adjusters say they can't blame it all on the combination of inflation and hurricanes.
We don't have hurricanes in Florida every year, contrary to popular belief. We have hurricanes in Florida every 2-3 years, something like that, and it hits part of the state usually and not the other parts. So most policyholders are not affected on it, just the areas where the hurricane hits.
Consumer groups and some state lawmakers also tie our insurance crisis to the people we elect and who they then appoint. They say it comes down to state leadership or a lack thereof, because they claim our state is far more likely to approve requests for rate hikes from the insurance companies based on the governing philosophy of Florida.
Most folks don't realize that there's an Office of Insurance Regulation that plays a role in this, that is appointed by the governor, by the cabinet, that approves any type of rate increases.
They say that goes for home insurance and car insurance and other things like rising utility bills.
Public Service Commission, appointed again by the governor, approved by the Senate, as people's utility rates go up, and we get emails and phone calls from folks who are upset that their Duke bill is going up, their FPL bill is going up. They're mad about it, but they don't realize the connection to the PSC.
For perspective, the governor of Georgia recently signed a law to give regulators more control over rates in his state. Florida leaders have not done that. Georgia also has a different type of auto insurance system. It, for example, does not require drivers to buy no-fault coverage like Florida does. Florida requires this to cover medical treatment and some lost wages up to $10,000 to try to keep minor injuries from clogging up the court system and make it easier for injured drivers and passengers to get treatment. But critics of Florida's no-fault insurance say it also makes a lot of drivers buy health insurance they already have through work, and it has also been susceptible to fraud, which drives up our rates.
I still think no fault is more efficient and pays claims quicker. The problem is the fraud. So I think I would have to say that you're better off moving away from no fault.
Well, in 2021, the legislature did pass a bill to get rid of our no-fault insurance requirement. Going back to how our state is led, they did not commission research on how their approach to do this would affect the Florida market. Their own legislative analysis shows they could not determine how it would affect policyholders or health insurers or injured drivers or state and local governments. So they passed it on logic best described by State Senator Doug Broxson.
I'm very concerned about it. I believe that it has some negative potential, but I'm willing to vote for it.
That could have been their motto for this and a lot of things in Tallahassee. Concerned about it? Know it may backfire, but willing to vote for it.
In this case, we have to pass the bill to find out how much it costs.
Well, the governor eventually vetoed it based on those potential risks, which bring us right back to a state reeling in crisis, reforms that have not brought down our rates, losses from natural disasters, and the risk of more storms that could continue to blow up our rates.
Just watch what you spend, watch what you eat, grocery bills.
Now, in terms of what we as drivers can do about this, you could consider raising your deductible, though that does come with a risk of paying more if you have an accident. Or if you're a safe driver, you could consider a discount for putting one of those insurance company tracking devices in your car.
You're looking at a privacy trade-off. So if you're willing to give up some of these details about where you're going and how you're driving, how often you're driving, then you might see some benefit. But if you don't want the insurer riding shotgun with you, then you might say no to some of these programs.
Also consider price shopping through an independent agent who writes policies for a lot of different carriers, because different auto insurers do assess the levels of risk for drivers in different ways. And that can translate, of course, into different quotes for the same level of coverage, and may at least provide a little relief as our insurance rates continue to spiral in Florida's storm of money, power, and politics.